Good evening and a warm welcome to you all. My name is Dave Mutton and I'm the Chief Operating Officer for London South East. Thank you for joining us for our first investor webinar of 2021. Tonight we are focused on the metals and mining sector and have four interesting companies presenting for you: Orosur Mining, Rainbow Rare Earths, Savannah Resources and Goldplat. The mining sector has been a little unloved for several years, but 2020 did see gold and metal prices rise, which fed into higher valuations for the mining sector. Now, before we start with the presentations, I'll just quickly run through some housekeeping with you. Our usual online format allows for an 18-minute presentation by each company, followed by 10 minutes of live questions from you, the audience. Just look for the Q&A button at the bottom of the screen, type and submit your questions, and we'll put as many as we have time for to each CEO. Now, please do include your real name so we can give you a name check. As you probably know, each company has their own webpage on our website, lse.co.uk, with lots of company fundamentals so you can get up to speed on our companies there. And whilst you're watching, you could leave a message on the bulletin boards, updating the evening for those investors who couldn't attend. Most companies do keep an eye on our boards, so it isn't time wasted. And finally, we'll send everyone who registered a copy of the slide pack for each company tomorrow, as well as a video link to the entire webcast, which we are, of course, recording. So please enjoy the evening, and I'll now hand you over to our Head of Investor Relations, Donald Leggett, to introduce our first company of the evening. Over to you, Donald.
Thank you very much for the introduction, Dave. And now to the business end of the evening. First up, we have Brad George, the CEO of Orosur Mining. Orosur, as I'm sure you know, are a small cap gold explorer listed on Toronto's TSX and the London AIM market. They have a market cap of £49 million as of today, and there's a real buzz about them on the bulletin boards. The company updated the market on the Anza Gold project in Colombia 2 days ago, and George will expand on plans for Anza tonight, I'm sure. Orosur released positive results from the first hole and have seen sufficient positive visual indicators from the other four to extend the initial test drilling program. Over to you, Brad.
Good evening, everyone. My name is Brad George. I'm the CEO of Orosur Mining. In previous presentations, we've spoken about the history of the company in its wider context, but clearly, in light of the announcement yesterday on our drilling results and the response to it, the focus is on Anza. So tonight I will concentrate primarily on Colombia. A corporate snapshot, the obvious takeaways here being two, the reasonably positive share price movement since October when Agnico joined us in Colombia, and clearly a healthy cash balance of circa $6 million that we built up following a £4 million capital raising in November last year. I've made the point before that Orosur is not a new company. In fact, it's been around for quite some time, having operated the San Gregorio mine in Uruguay for over 20 years, producing about 1.5 million ounces. But all mines close, and closing is never fun, and so there was a few years of reasonably lean times until late last year when Colombia began to move to the fore. And so while Uruguay is still there, albeit being wound up now in an orderly fashion, we now regard ourselves as predominantly a Colombian company. We're not alone in Colombia, of course. The Mid-Cauca belt in the northwest of the country is increasingly becoming the place to be in this part of South America. We only saw last week in Australia, Los Cerros announced drill results from a recent hole, 380 meters at 1.5 grams from surface. We see different styles here, from the large low-grade porphyries all the way through to the smaller but much higher grade epithermal vein deposits, chief of which is the Boditica deposit north along strike from us, which is currently over 11 million ounces. Importantly, we have quite a large land position of over 200 square kilometres, which covers quite a long strike length of two major structures, the Tenosco and the Aragon faults. Roughly half of our package has been granted. The remaining half is at the application stage, and we'll look forward to moving that into granted status this year. The joint venture is a complicated one over quite a long period of time, covering $26 million over a 12-year period. We're now in year 3, so we have something like 9.5 years to go. And should the project go to completion according to the timeframes, Orosur would end up with a residual holding of 25%. I won't go too much into geology, given the nature of this audience, but just to give you some regional context, we are in the northwest, we're in the mid-Cauca belt. It's a major structural zone running north-south, and quite clearly we are directly along strike from Boditica, which is a nice place to be. On a local scale, things are more complex, as geology always seems to be. I'd noted previously that the gold events we were seeing were quite young. They're late Miocene, so really only a few million years old. But the recent drilling, and indeed the old drilling, is showing an earlier volcanogenic massive sulfide system. Now, we don't know whether these two things are related or whether they are separate events that simply exploited the same structures. And while this is an academic argument that doesn't impact upon what we're doing in APTA at the moment, it is throwing up some opportunities for us in the wider area, as clearly there's quite a lot going on, and the potential for different styles of mineralisation, both gold and base metals, is something that we will look at in more detail as we move to the wider region. When we're talking about the Ansar project, we are, at least for the moment, focusing on the central core, which is the APTA deposit, which has seen most of the activity to date, with drilling of the order of 24,000 metres. The appeal and what has attracted the majors is that it demonstrates most of the key features that you want to see in a gold deposit, namely it had decent grade and it's thick. We're not simply chasing narrow veins here, we are looking at very thick intersections, in some cases beyond 50 metres, of quite considerable grade and a high level of consistency from hole to hole. From the previous drilling, the numbers to a large extent speak for themselves. We've drilled over a strike length of several hundred metres, and the intersections that have been previously announced are in places quite considerable. We're seeing of the order of 40 metres at over 14 grams. Yesterday, we announced the assay results of our first hole of this current campaign, MAP 72. The headline being a reasonably encouraging 70.5 metres at 3.53 grams gold, with some silver and zinc credits and some obviously higher grade zones within that. This was largely a verification hole, but it exceeded expectations by demonstrating a breccia package well in excess of expectations of something of the order of 110 metres thick. This then gave us comfort to step down, dip roughly 100 metres for MAP 75. This has been completed and assays are pending, but visually it has intersected breccia packages of similar thickness, which in turn again allows us to step down to MAP 77, which is currently underway. The other point to make is that clearly there is a polymetallic nature to this ore body. We are seeing in MAP 72 intersections of silver in excess of 80 grams a tonne, and in places zinc in excess of 8%. We don't at this stage understand the economics of this, but clearly it's a good problem to have, and it will require some more metallurgical work for us to understand how this will impact upon economics and mining. Now, in light of these quite exceptional results and the attention that the project is obviously now seeing from Agnico and Newmont, we get asked two questions. The first is, where has the project been all these years? If it's so good, why are we only now seeing it being drilled out? And the second question is, if 24,000 metres have already been drilled, why is there no resource? Now, these are fair questions and they deserve an answer, but both of the questions throw up significant opportunities for us going forward. To answer the first of these questions, we need to understand the history of the project. Going back in the day, Ansar was originally part of Continental Gold, but they needed to make a decision between Boditica and Ansar was then spun off into Canadian-listed Werner Resources. Werner did quite a lot of work up until about 2013, then became financially constrained due to a general collapse in the junior mining sector about that time. Orosur came in late 2014 with a view to moving the project forward and did quite a lot of work. But then Orosur in turn became financially constrained as the operations in Uruguay began to experience some problems. That in turn led to the joint venture with Newmont in late 2018. But then almost immediately there were some security issues in Colombia. And in the beginning of 2019, we began to see the discussions and eventual mergers between some of the major companies such as Newmont, Barrick, Goldcorp, so on and so forth. That then led to Agnico coming in 2020, and then drilling is obviously now ramping up. So the project has always been there. It's always been a good project, but it's really a question of bad luck and bad timing that the project has always seemed to be overshadowed by bigger events. The second question is the technical one. It's where I think things get interesting and where the opportunities become rather exciting. The estimation of a resource, among many things, requires a good understanding of the geological continuity from hole to hole and across the ore body in general. Now, this in turn means that any ore body should be drilled in a way that answers the specific questions that are thrown up, and every ore body will be a little bit different. But as we see in the little cartoon on the right, drilling in APTA is somewhat challenging. We need to cut tracks in, we need to build pads, and then in effect throw the rig over the side. And so while drilling is not in itself expensive, the moving of the rig from pad to pad is slow and expensive. And this led to the tendency by previous companies to drill lots of holes from the one place as a cost-saving measure, rather than moving the rig around to more optimal positions. Now, this led to the result that many of the early holes, while providing good assays, they were not well positioned in terms of estimating a resource. But this is really where opportunities arise for two reasons. Firstly, we can very quickly correct this and move things forward quite efficiently. But perhaps more importantly, it means that most of the APTA deposit, in my mind, remains untouched. One of these issues, and perhaps the least important, is the question of dip. In the early days, it was thought that the ore body dipped toward the west, and as a result, the holes were directed toward the east. And this is not unusual. The dip is often a difficult thing to ascertain early on. But it did mean that many of the early holes drilled down the veins, and while this superficially at times gave some spectacular results, it was geologically misleading. The beauty, however, here is that we can correct this with a couple of holes. We know where to drill given the previous assays, and we can turn this around with one or two well-positioned holes. The more significant issue, however, is, as I mentioned, this tendency by previous companies to drill many holes from the one location into a small part of the ore body. Now, this was probably understandable at the time if the company was cash constrained, because it's a very cost-effective way of generating some good results. But the holes that we've drilled, or the holes that we are drilling up and down dip, are demonstrating that we've got a reasonably tabular zone of mineralisation, and we're seeing a reasonably good correlation and continuity from hole to hole. This suggests that there is potentially hundreds of metres up and down dip that have simply not been touched. And while obviously the results need to be confirmed, this is giving us a high level of comfort that we may be seeing some very significant tonnages here. And the final opportunity, or at least benefit, is the fact that we can see the ore. We noted recently an announcement that as a result of COVID, our turnaround times from the lab had moved out from an expected 2 weeks to nearer to 5 or 6 weeks. Now, this under normal circumstances, if we had 3 rigs running, would be a problem, as we would be in effect drilling blind. But as we can see here, the main breccia zone is quite visibly stark. It's clearly a breccia zone. We're seeing intense silicification and this pervasive and widespread development of massive sulfides. So while we don't get assays from this, we are able to quite accurately determine where the breccia zone is, and that allows us to continue drilling without any major impact from the assay delays. Stepping back out to the wider tenement area and the geochemical anomalies, I made the comment previously that APTA had been drilled not because it was the best target, but because it was the easiest to get at, a comment that still remains reasonably valid. We see here, however, some very attractive geochemical anomalies north, south and west that clearly require attention. but all require some modification to access agreements. Latahita to the north potentially is a large intrusive source to many of the systems we're seeing here. And Jesuitas along strike to the north on the Aragon Fault, it could well be an APTA analogue. But both of these, while within our lease packages, have not yet been granted, and we hope to move those forward during the year. Guaymorala to the south, on the other hand, is on a granted tenement, but needs some negotiation of land access. Again, we hope to complete in the early part of this year. And so while we've seen some delays to assay results, it's not for the want of being busy. At last count, we had something near to 80 people on site. The first rig arrived mid-November, the second rig late November, the third rig has just arrived and will be commencing work next week. We've drilled 5 holes for close to 1,800 metres. Our original plan of 23 to 2,400 metres is now moving more toward 8 to 10,000 metres. We have some comfort now in the potential of APTA. We want to expand and define that, and potentially, if warranted, move that to a resource in the medium term. We've done some geophysical surveys with interesting results. We need to get access to our applications and to the farming country that will then allow us to undertake geochemical surveys to define some more targets we hope to be able to drill later in the year. So COVID remains probably our biggest challenge in terms of being able to work safely and to move people around. But we certainly have an expectation that over the course of the year, as that falls away, we'll be able to ramp up activity quite significantly. And so to wrap up, looking forward to this year, despite having had a reasonably exciting share price run since October, I'd like to think that there's some gas in the tank yet on a number of fronts. Clearly, the gold price continues to have a reasonable degree of bullish support out there. And being a gold company, it certainly helps to have some, and we have that. 3 drill rigs are going to be throwing off quite regular news flow. And if we, as we hope, increase those to 4 or 5 rigs, then that will only increase. And every hole we drill adds ounces, and over the course of the year, we hope to get a better understanding of the potential size of APTA. The beauty of having a JV locked in with major partners is that we are something of a known commodity. The funding's in place, the majors are paying the bills, we know what the ultimate equity participation is going to be. It's simply a question of the size of potential of what we're seeing in APTA and surrounding prospects. And having a strong balance sheet that we built up from capital raising last year gives us the strength to hold our position for as long as necessary. We have made the point previously that we may be looking at the opportunities, and that remains on the to-do list. But for the moment with COVID, it's on page 2. So that's something we will look at perhaps a bit later in the year. But all being equal, it looks like being a quite interesting and rather exciting year.
Brad, thank you very much indeed for that update. Are you there? Come and join me from Perth, Australia, Brad.
Yes, good morning, Donald. I can't seem to get my video started. Is that you? I'm told you stopped it.
Oh, over to you, Mike. Can you sort Brad's video out, please?
Right, there we go. There's always an IT person in the background.
Where there's a way, Brad. So first of all, I've got to say thank you for joining us from Perth, Australia at 2 in the morning. Something like 2 in the morning anyway.
Yeah, I've already had 2 coffees, so fire away.
So how are you feeling?
A bit buzzy, but I'm feeling quite good, surprisingly.
Great. Now that your presentation was very interesting. It was quite backward looking. You put out a cracking RNS a couple of days ago. Let's forgive the pun, drill down on that. What did you see in those first 5 holes which encouraged you to expand the drill program?
There are really 2 key things we see in those holes. I mean, obviously the first hole was verification, so we saw what we expected and that was fine. But we then began to step out in quite big steps of 100 meters. And then seeing the ore zone as we wanted to see it, where we expected to see it, is quite encouraging. So it's that continuity from hole to hole that's really getting us quite fidgety.
And you found the dip now, if I understood you correctly. Previous drills hadn't found the dip, but thought they had, but you've actually found it this time.
We probably found that back in 2017. I mean, it may sound silly that how can you get the dip wrong, but actually it's quite a common problem. So the first drillers were assuming a certain dip on the basis of regional geology, and and clearly that wasn't correct. So yeah, it's quite a common issue, and it's not a mistake. It just always takes time to define that.
Okay. What is the evidence that you have so far? Is it sufficient to say that ANZA has actually been de-risked, or is it still work in progress?
Look, I think the short answer is yes, it has been de-risked. The long answer is not entirely. The biggest risk with mining exploration, of course, is geology. And we have absolutely no control over, what is there. What is there is what's there. We need to deal with what we find. And while this is highly encouraging, it's good projects are actually quite rare. I mean, it's a sad fact that most geologists will spend their entire careers, grow old and retire, never having found anything of any great note. But that's fine. We have fun along the way, so don't feel sorry for us. But this project, at least to my mind, has the makings of potentially a once-in-a-career opportunity. Now, that might be an indictment upon my career, but it certainly has the makings at the moment of being quite exciting.
Okay, Mike, can we pull up slide 18 again? Okay, can we see slide 18? Fantastic. Now I'm going to ask you about this, about slide 18, Brad. This is a slide that shows how tightly concentrated the previous drilling programs were, and you've now moved out in 100-meter steps. So what difference has this made, and what have you subsequently discovered by moving out in those steps?
The key thing here is two. One is the thickness, and the second is what we're seeing so far is the tabular nature of this thing. I mean, that comes from the fact that geologically this was basically formed yesterday. This is very, very young in geological terms. In Australia, we deal with things that are billions of years old. So there hasn't been a lot of time for this thing to be subsequently screwed up by folding and faulting and what have you. So it's still, to a large degree, somewhat intact. And what this means is that because of the thickness, it's a very efficient project to drill in terms of the number of tons you get per drill hole. If we're chasing small veins, and it's quite a long drawn out process, but this continuity from hole to hole and this ability to find very thick packages of ore means that we can add a lot of tons really quickly.
You were mentioning a figure of 110 meters and lots of intersections. For non-geologists, those are both very good signs, are they?
Well, they're very good signs. I mean, everyone says grade is king, but really grade and thickness are king. And it's far too early for us to be giving numbers, but we are certainly at this point madly scribbling diagrams on the back of fag packets. And you start adding dimensions to this thing of 50 meters thick, 500 meters high, 200 meters wide, and working out volumes and tons. And you very quickly find that you start adding up tons and ounces at quite a rapid rate. I mean, it's not beyond the possibility that if we start getting more of these whole 72 similar results at wide spacing, we're adding potentially 1 million tons and 100,000 ounces per hole. So it will be a very quick project to build the tons up. Okay,
now you may find this a tough one to answer, but it does follow on. Do you think you and the Agnico Newmont joint venture are still on track for the world-class Tier 1 gold mine in Colombia? What do you think? You're there.
Okay. Define world class. Look, I think the answer is probably yes. I mean, obviously we're not there yet, but from what we've seen on the early holes, this is not something you see very often. I mean, to get these kinds of numbers over this kind of width and this kind of depth extent, it certainly has the makings of something world class, yes.
Yes, and you said you think there's still gas in the tank yet, if I can quote from your presentation. So that's why you think there's still gas in the tank. This is a biggie.
Well, yes. I mean, we are drilling on a very, very postage stamp size part of the project at the moment, and we're coming back with really big hits. Once we begin to step out, then who knows how big this thing becomes.
Okay. Wolf Earth asked by email, what are the problems you expect to come across in the next 3 years? And I don't think he's referencing getting up at 2 in the morning to speak to us.
I suspect there'll be millions of them. The issue
Give us the big ones. What are the headline problems you expect?
The big issue always is going to be geology. I mean, we're not building Volkswagens here. This is an industry, or this is a process over which we have absolutely no control of what we find. We just have to deal with every hole as it comes along. So there is a constant process of making up as you go along. But the other problems are going to be ultimately the bigger we become, the more attention that we're going to receive from the government and the communities and so on and so forth. So as this very quickly, we hope, moves toward a mining project, then we begin to throw up the challenges that brings with it, you know, environmental, social, so on and so forth. So I think those are the issues that we are going to have to deal with, or hopefully sooner rather than later, but you know, the issues that all mining projects deal with, and they are quite good problems to have.
Okay, Andrea Scott talks about another level of problem, security issues. She asks, are these of a political nature? And, you know, what I would describe as in-country risk. Discuss.
Political, no. Colombia, in terms of political risk or political security, is one of the top countries to be in. The risk in Colombia has historically stemmed more from bandits and variety of smaller scale, you know, violence. And that's what ultimately led to Newmont, I guess, not being able to operate in 2018. That, to a large degree now, has sort of faded away. We don't have the old Pablo Escobar kind of things going on anymore. There's still small scale issues, but by and large, the troubles of earlier years have certainly decreased significantly.
Elephant Country, was that a reference to the bandits?
No, elephant in terms of very, very large projects. You know, it's a mining term. When you start seeing gold projects of 10, 20, 30 million ounces, we deem that to be elephant country.
Okay. I have another question coming in. Peter McLennan, put your hand up, Peter McLennan, you're on. You previously mentioned that if initial assay results were good, the JVs might take over drilling in the short term. Do you envisage this will be the case given the recently RNS results?
Look, I don't speak for Agnico and Newmont, but I will certainly have that expectation. They have the right as part of the joint venture to assume operational control at a point of their choosing. And once they become comfortable that the project shows signs of being of their scale, then I would assume that they will do that. But that won't actually change much. I mean, it'll be the same staff doing the same job. They'll just have different shirts on. The only thing that will change is I no longer need to do monthly reports, so that'll be quite a nice change.
A blessing. But you still end up with 25% of the project.
The JV is locked in. If it runs through its course of another 9.5 years, and I don't expect that it will, then we end up with a residual 25%. Yes, which is we can, to a degree, we would hope, be able to sit back and enjoy the ride.
And how are things bedding down with your JV partners? You're playing with some of the big boys. Newmont and Agnico are two top 10 miners. How are things going on the ground?
We love them to bits. I mean, obviously there are obviously differences between a dodgy junior and companies of this size in terms of their process, procedures, bureaucracy, and so on and so forth. The beauty, however, is that neither Agnico and Newmont have any great Colombian presence, and so to a large degree, they're letting us get on with things. And then even if they do take over control as we expect, it'll still be the same team doing the same job. So they're excellent in terms of their funding. They're excellent in terms of giving us access to their very substantial technical skills base. But they're allowing us to just crack on and move this thing forward. So I found them excellent to work with.
Fantastic. Graham Warnock asks, with the JV funding the ventures, is there any need for more share issues, placings? Can we expect a placing in the future?
I would hope not in the near term. I mean, we raised the money in November largely in order to give ourselves the strength to hold our position. Now, as I said, we potentially have 9.5 years of this JV to run. So we need to be in a position where we can stand our ground and not be financially stressed and give larger companies a chance to come in and make our life difficult. So we needed that money. That was what we thought we would need. The capital raising, of course, had half warrants attached, and should the share price carry on as we hope, they'll be exercised and give us a few more $1 million. So we are reasonably comfortable that if we continue on this joint venture, we're in a pretty good position in terms of cash. New projects, as I said, we are looking at new projects that may in future, who knows, require more cash. But with COVID, those things are certainly on page 2 of the to-do list. So I wouldn't expect those to come to the fore in any near term.
Okay, now here's someone who's keen. John Morris wants a geology guide to the region. I wonder if you could give him a reference book. I think he wants to be as across this as you are yourself.
Look, I don't have one handy. I'll maybe put a few up.
If you could, that'd be very helpful. John Morris wants one.
Go and Google. There's plenty out there, but they're all often very dry reads. So I wouldn't be.
That's what he wants to know, though, Brad. What's the least dry read?
The issue, however, is that geologists always tend to like to put their deposits into little pigeonholes, but it never really worked because every deposit is different, and we like to say it's this or it's that, but in reality, it's a bit of this and a bit of that. And so I think what I will say, without being pompous, is this is probably a project that will itself in time become the subject of august papers. So just give it a while.
Okay. Another question for you, from Ben Jones this time. You've brought in Nick von Scherning. Apologies for the pronunciation. What's your reasoning for this at this stage? Thank you.
Well, there were several reasons. We needed to have another director, largely by dint of some of the Canadian rules, which have a slightly more complicated requirement for directors. So the question was who? And Nick is someone that brings with him a reputation that neither myself or Louis do. I mean, Louis and I know what we're doing. Operationally, we're quite comfortable with how we run the company, but we don't have that institutional name around town. And ultimately, we, as the company grows, we want to begin to attract more interesting, not almost that's the wrong thing to say, larger institutional shareholders. And for that, it helps to have someone with an outstanding track record amongst that institutional space, and Nick brings that with him in spades.
Fantastic. Okay, final question. Can we expect drilling from Carrascal and Guadalmara during this drilling campaign? Do you expect this, and do you expect to, this is a cheeky question, do you expect to receive better drilling results from those? As if you've not delivered excellent drilling results.
Well, I certainly hope so. I mean, the focus is going to be eventually drilling on at least 2, probably 3 projects simultaneously. Mm-hmm. So I think drilling at Aptar will continue. I mean, at the moment, we're just doing the wide-spaced to get a sense of how big this might be. And once we know that, then we'll come back in and do the very boring resource conversion stuff. So that's 1 or 2 rigs. And then the other rigs, once we've done some more geochemistry, identified targets, then we step out and drill probably Guatemala first, and then the projects to the north and so on and so forth. So we have a rough schedule in mind, but we would like to think that in reasonably short time, we'll be drilling on a couple of projects at the same time.
Brad, thank you very much indeed. You're a complete star. Thank you so much for getting up in the middle of the night to speak to us. Okay. Thank you.
Always a pleasure.
Go. Well done. That was a great start to the evening. Okay, over we go to Rainbow Rare Earths. Rainbow Rare Earths, it's a South African headquartered producer of rare earth metals listed on AIM. The company says analysts are predicting demand for rare earth oxides, that's NdPrs. It will grow substantially, and Rainbow are currently producing in Burundi in Africa and one of only 3 listed rare earth mines outside of China. Also of great interest is a project to develop gypsum stacks for NdPr recovery at Phalaborwa in South Africa. When CEO George Bennett and his co-investors recapitalized Rainbow last September, shares were in the doldrums at 3p and have since re-rated to 13 pence. So good on you for those who recognized George was going to do the business. It's given RBW a market cap of £65 million today. And George Bennett, CEO at Rainbow Rare Earths, joined us live from Johannesburg this evening. We're getting around the globe. Welcome, George.
Thank you for having me, Donald.
It's a pleasure, George. It's a pleasure. Now, we're not seeing your video. There you are. Fantastic. Okay, so over to you, George.
Sure. I'm just going to screen share my presentation. Can you guys see that?
Yes, just give us a second or two and it'll work through.
There we go. How's that?
Beautiful. Over to you, George.
Okay, good evening, everybody, from wherever you might be tuning into this presentation. Thanks for hosting us, and I really appreciate it. So Rainbow is, as mentioned, is the only operating rare earth mine in Africa right now. And we are at the forefront of what is known as the green revolution in terms of changes happening in technology, certainly in the electric vehicle space, as well as the green power space, which is wind turbine power being driven by large direct drive wind turbines going forward. There's our disclaimer. As I said, all modern technology today requires rare earth elements. There's this being from your cell phone, your AirPods, your drones, your electric motorbikes, your electric scooters, electric bicycles, but very importantly, going forward, electric vehicles and direct drive wind turbines. And the growth in these two areas has been driven largely by government legislation. And by that, I mean that there are emission standards that governments have said they're going to meet. And with that, they have decided to implement controls on internal combustion engines going forward. And they've also got green energy targets being driven by wind turbines. As you can see, what's driving the current growth in rare earth demand is two key elements called neodymium and praseodymium. And these are basically required for permanent magnets. And permanent magnets go into all these technologies I'm talking about. They go into all the drives, all the motors for the electric vehicle drives. They go into the drive of large wind turbines, and even your earphones from your iPod and so forth. All require permanent magnets. And neodymium and praseodymium are two of the 17 rare earth elements, but they make up 91% of the value of a rare earth basket. And that's why all projects around the world at the moment are chasing these two key elements, being neodymium and praseodymium. As I said, global demand in rare earth magnets is forecast to grow exponentially. At the moment, demand is sitting around about 50 to 60,000 tons per annum of neodymium and praseodymium and permanent magnets, and by 2030 it's expected to exceed 140,000 tons. So we've seen 200-300, even possibly increase in demand for neodymium and praseodymium. And as I said, it's been driven by government legislation. As we know, the UK is banning petrol and diesel car sales by 2030. They're even going to ban hybrid sales by 2035. And companies like Germany are targeting wind power expansion to increase by 40 gigawatts, and every wind turbine, 3 megawatt wind turbine, requires 2 tons of permanent magnets, and that's huge demand for rare earths in these permanent magnets that go into one wind turbine drive alone. As I've mentioned, you can see from the chart, these are the forecasts of demand. And basically, this demand is driving the current increase in neodymium and praseodymium prices that we've seen over the last 3 months in the market. We've seen prices increase by somewhere between 40 and 60% in neodymium and praseodymium. And for once, the forecasters were correct in forecasting that 2020 and 2021 would be the inflection point where they saw neodymium and praseodymium demand being outstripping supply. And I think we started to see that over the last 3 months. In terms of forecasts of supply, China currently dominates the rare earth market. They are responsible for about 85% of the rare earth oxides mined, and they're responsible for about 90 to 95% of the downstream processing of rare earths and the actual separation of rare earths into the various oxides and rare earth metals that are required in all these high-tech industries. So at the moment, we're seeing a major shift in North America, the Canadians, America, and the EU now have started realizing that they need to look at alternative supply of rare earth and diversifying the supply chain away from China. We've just seen the American government support a big rare earth project, downstream project in the US with Lynas Corporation. And years ago, we saw Japan step in and help Lynas out because they wanted an alternative supply chain for rare earths outside of China. And Rainbow is very well positioned to become a significant supplier of these critical rare earth elements going forward. I've spoken about the neodymium, praseodymium price forecast, and we've already seen that starting to happen, as I said, over the last 3 months, where we've seen these prices rising quite substantially. Now in Rainbow, we are the only rare earth project that I'm aware of, and mine for that matter, that's got country diversification as well as project diversification. We've got the Kakara project in Burundi, as well as the Talaboa project in South Africa. And I'll start with the Kakara project in Burundi. At the moment, we have a large mining permit covering 39 square kilometers, where we have got over 1,500 occurrences of rare earths within our mining license area. And we've got somewhere in the region of 57 targets. And when I say targets, these are not targets that we need to go and see if they've got rare earths there. Every one of these targets is mineralized and has rare earth occurrences. So we're in a very, very good position in Burundi. We have a trial mining operation where we are consistently shipping concentrate that we produce to China every month. And for the last 3 months, we've shipped 100 tons a month. And for the first quarter of this year, we're forecasting another 100 ton a month shipments to China. We produce one of the highest grade concentrates in the world, somewhere between 52 and 58% grade TREO. That stands for total rare earth oxides. There's only one project that I'm aware of that's got a higher grade concentrates, and that's Mountain Pass in America. And all the other projects that are on the cards, none of them can get to this grade of concentrate that we're experiencing in Burundi. What's also another big bonus in Burundi is that we've got very, very high grade veins with in situ grades running at some of the highest in the world. And we've also got pressure hosted deposits, which are lower grade. And we have drilled one of these deposits 2 years ago. And going forward, we will be going on a drill program to prove up our large mineralized resource that we have at Kakara. Just 4 months ago, we came out with a JORC exploration target. This is just from 9 of our targets. We got a JORC exploration target, which indicated that we've got at least 5,000 tons of concentrate production per annum for a 12 to 15 year mine life. And it's my intention to get this up to 10,000 tons per annum, and then go and take our trial mining operation into a larger commercial scale mining operation. As I've mentioned, we have got over 1,500 occurrences and 57 targets. The 5,000 tons in the exploration target, I must stress, was only as a result of 9 targets out of our 57 targets. So I think you can see why I'm confident that with getting 5,000 tons out of 9 targets, I'm confident out of the balance of our targets, we'll get to at least 10,000 tons of concentrate production, if not larger. Another thing I might stress is that we've got 7 historical Belgian mines within our mine license area. And generally in Africa, over the last 30 years, about 8 or 9 out of 10 large-scale modern mining operations have been founded on either historical, colonial, or artisanal mines, and we have 7 within our mining license area. So we're very confident that these Belgian mines, these historical Belgian mines, have got far more resources in them, and we should easily get to our target and be able to expand our operations to the size that we want to expand in Burundi. There's the JORC exploration target we came out with in October. And as you can see, if we take the average between the lower and the upper estimate, we comfortably get to at least 5,000 tons. And this is the target I intend to grow when we start a drilling program later in 2021. Where Rainbow has an advantage over lots of other projects in Africa and other projects that that still have to be developed, is that our trial mining is proving proof of concept. We're consistently producing, as I've mentioned, one of the highest grade concentrates in the world, and we have consistently proven that we've got very low levels of uranium and thorium in our deposit, and most rare earth projects encounter problems with uranium and thorium, and they have to have processes to remove this from their ore body. We are very lucky that our tailings are benign. They've got very low levels, as I said, and we are consistently shipping this on the high seas with our contractor ThyssenKrupp and exporting into China. And the fact that we can export into China confirms that radioactive levels are very, very low. And this is a major selling point for Rainbow. We have a very simple process. We just crush and screen, and with gravity, we produce this very high grade concentrate, and which makes our operating costs very low to produce a concentrate, and our capital intensity for this for our project is very low. And when we go to full scale commercial mining, as I said, initially I want to start at 10,000 tons per annum. Once again, we will demonstrate a very, very low capital intensity for the type of production we'll be doing. And as I said, at stage 4, we will be building a commercial scale mine, which we're going to expand. And then we don't expect the capital for that not to exceed $20 million for a 10,000 ton per annum concentrate plant, which, as I say, is very, very low. And stage 5, we'll be looking at going downstream to beneficiate rare earth concentrate. And once again, our beneficiation plant to produce a mixed rare earth carbonate, we believe will be a very low capital intensity bit of plant, and because we're blessed with very good mineralogy in Gakara. As you can see, there's our pilot plant, which is successfully producing this high-grade concentrate. Very simple process, and it's really a green process that we have at the moment in Burundi, with very, very benign tailings going out to our tailings stack. The game changer for Rainbow is also our Phalaborwa project. In October, we recently signed a deal in South Africa to process gypsum stacks that are a result of mining in South Africa. These gypsum stacks were, as I said, are the result of 50 years of mining by Phoscor, the government mining body, and they produce a phosphate concentrate from a hard rock deposit, which was shipped next door or piped next door to Sasol, who had a phosphoric acid plant. This phosphoric acid plant produced phosphoric acid, which is a key ingredient for fertilizer. And during this production of phosphoric acid, they produced a gypsum residue, which was deposited on 2 stacks at Phalaborwa, grading at this stage 0.6% TREO, total rare earth oxides. These are the initial samples that we saw that Sasol had achieved on these stacks, and the resultant lab tests that we've seen indicate 30% neodymium praseodymium in the basket. This is one of the highest grade baskets in the world, and bodes very well for the viability of this project. Now, 0.6% might seem low in terms of a project, but when we have to look at Phalaborwa in light of our ionic clay deposit in China, which is what they typically mine in China, and there they mine 0.03 to 0.08% grade TREO. So Phalaborwa is looking to be about 10 times higher grade, 10 times what they typically mine in China. And very important is that all the gypsum is already mined, it sits above the ground, and it's basically sitting in a chemical form, which is also another big bonus for this project. One of the key aspects that we believe de-risked this project for Rainbow was that Sasol built a full-scale pilot plant some 7-8 years ago, and they produced 3 tons of a mixed rare earth carbonate. So we know that they've successfully extracted the gypsum from the rare earths from the gypsum at Phalaborwa, and as I mentioned, they produced a mixed rare earth carbonate. And really, what's very key is that the gypsum sits in the chemical form already and is being cracked. And a very expensive part of all rare earth projects around the world is once you have a concentrate, you have to crack it into a chemical form. And this has already happened by courtesy of Foscor and then Sasol at Phalaborwa, and it also would indicate that we'll have a very low capital intensity project at Phalaborwa. We've got a very low cost of an earn-in there to earn 70% of this project, and we'll be able to do that on completion of a pre-feasibility study. We've already drilled the gypsum stacks. We completed the drilling very, very quickly, ahead of schedule and under budget in December. And all our drill core is now sitting with SGS laboratories, waiting for the assays to start coming out next month. What we do, sorry, I'm just looking at where I'm going now. So what we do see in Phalaborwa is Phalaborwa being a significant producer of neodymium and praseodymium. And if I can put that into context, if we achieve our initial forecast for production out of Phalaborwa, we're looking to treat somewhere in the region of 2 million tons per annum of gypsum, which will give the project a 17-year life. And out of 2 million plus minus tons of gypsum treated, if the grades come back consistent, as we believe they will be from the assays currently being undertaken, we should see ourselves producing 6,000 tons of mixed rare earth carbonate, and we will see 3,000 tons per annum, just over 3,000 tons per annum of neodymium praseodymium oxide. And if we add what we're going to be doing in Burundi, out of our 10,000 tons of concentrate being produced in Burundi, we believe we'll be able to get 1,000 tons of neodymium praseodymium oxide metal out of Burundi. And with both projects together, we'll be producing just over 4,000 tons of neodymium praseodymium oxide, which is about 80% of the size of Mountain Pass. And Mountain Pass has a market cap of in the region of about $5 billion these days. So you can see that we believe there's Rainbow has lots of upside. We believe we'll be one of the major producers of neodymium and praseodymium, and very importantly, we'll be very quick to bring both projects online. I mean, Phalaborwa, we anticipate will be in production in 2 to 2.5 years' time, and we're already in production in Gokara, and Gokara will just be a matter of ramping up production once we've proven that we've got the resource, which we believe we have at Gokara, to increase our trial mining into full-scale commercial mining. And within 2 to 3 years, we can see ourselves as one of the largest producers of neodymium and praseodymium in the world. And whereas a typical project, hard rock exploration project, you're looking at a 7 to 10 year life of bringing this project into production.
Okay,
so,
time to wrap here, George. Are you good to go?
Yep. No, as I said, both projects we believe are world class. We have got country diversification and project diversification. Thank you very much.
Okay, George, thank you very much indeed. Let me quickly ask you straight in. Ian Wright asks, what are the biggest risks for your two projects, and how are you managing them?
The biggest risk in Burundi is we don't have the resource for some reason, but we've had since over the last year, we've had 2 independent geological studies, and they've both confirmed that we're in a very, very large, what they call large mineralized area. And we fully believe that with the drill program we are looking to embark on in the second half of 2021, that we will prove that we've got the resources to increase the production significantly at Gokara. We do not have mineralogy problems. We do not have uranium and thorium problems, which a lot of rare earth projects have. And we already have the back end of a bankable feasibility study completed, where we've got an offtake agreement. We successfully shipping to market, and we're successfully shipping on the high seas. So to a large extent, the back end of a bankable feasibility study is de-risked at Burundi. It's just the front end that we are busy proving up.
So where exactly are you with the feasibility study at Gakara?
So we will be, as I said, in the second half of this year, drilling to prove the resource that is big enough to do 10,000 tons per annum of production. And once we have the resource, then we'll do our technical feasibility study.
So it's slightly, you're already running a pilot mine, but haven't quite done the feasibility work on it. It's a strange situation, isn't it?
Well, it is. It is a strange situation, but as I said, it happened before my time. But a large part of what happened before my time has been successful in terms of the back end of the feasibility study has been proven.
Sure, you've got the contract with ThyssenKrupp.
Correct. We consistently ship. There's no problem with shipping to Dar es Salaam, exporting through Dar es Salaam, exporting into China. All those parts of the feasibility study have been done. So a lot of good work was done before I got to Burundi.
So what are the next steps you need to take to get up to this mythical 10,000 tons that you're talking to us about? You've only done 2,000 to date. You've only done 2,000.
No, we already have a JORC exploration target based on hard facts. At 5,000 tons, it's my intention is to take it up to 10,000 tons.
And how much capex will that take? And what's the plan? Give us the bare bones of the plan to get you to 10,000 tons in 2 years.
The capex there would be, well, in terms of, well, it's not capex. It's the funding for the drilling and the feasibility is we're looking at about $4 to $5 million.
And where does that come from?
That'll come from a fundraise.
Okay, so placing, you've got investors involved to this date, but you're not going to, or they'll get involved in the fundraise as well, perhaps.
Most definitely, we have no shortage of support for Rainbow.
No, I'm entirely sure. We've just had someone message us as part of the question, just say that they're going to become an investor. So you're doing well. Andrea Scott is about to become an investor. Either way, she likes what you say, George. You've found a fan. You've a new investor in me. It's Rainbow sounds very colourful. Am I correct in thinking that you mine a variety of rare earths and sometimes find surprises? Or do you target specific rare earths, she asks?
Just before I answer that question, I'd also like to highlight that Phalaborwa, we've already drilled it. And once the assay results come out, which we believe will prove that deposit is as good as it is, we've got a very significant rare deposit at Phalaborwa, which is already mined, which is why we believe we'll be at a very low capital intensity project. And as I said, so we will have a lot of good news flow, and we are fully funded at this point in time to be able to deliver the positive news flow we believe will come out of Phalaborwa, which is the assay results and the initial metallurgy and ongoing optimization of the flow sheet. The fact that we've got a pilot plant that produced 3 tons of mixed rare earth carbonates out of Phalaborwa is a very, very important consideration for that project. And we're in the middle of a very, very developed mining town. So we've got amazing infrastructure around us, which a lot of projects don't have. So yes. We've got 2 rail sidings, we've got power, we've got mine suppliers, we've got machine shops, we've got workshops, we've got everything already at Phalaborwa.
You've got 2 cracking assets, is what you're telling me.
Correct, yes.
Okay. Somebody congratulates you on your 2 new hires. There you go, that's always good. Edmund says congratulations on your 2 new hires today. Can you see gypsum? The gypsum stacks in Phalaborwa do sound like a bit of a one-off. Is that fair, or can you find other circumstances in other parts of Africa where similar has happened?
Well, Phalaborwa, we believe, is potentially a one-off because of the process that happened before the gypsum was created in the stacks. You had Phoscore producing a phosphate concentrate from a hard rock, and the rare earths that were present in the hard rock were concentrated to higher concentrations because on their own in the hard rock you wouldn't mine them, and then the phosphoric acid process once again concentrated the rare earths further. So suddenly you have, by courtesy of those 2 processes, you have a higher concentration of rare earths which make them economic. They wouldn't be economic on their own. So
it is a bit of a one-off.
Yeah.
Okay. What's the potential for other offtake agreements, says Edmund?
We will definitely be looking at that once we have confirmed the size of our resource at Palabora. Correct.
Fantastic. Paul Rankin is a little bit cheeky. He says, if it's a simple crush and screen process in Burundi, why aren't you producing more concentrate to date?
Because it's a pilot plant. It's not a full-scale commercial plant.
Yes, and as you've explained, it's going to go up to 10,000 tons within 2 years. Okay. Yes. Well, look, we've just hit 7 o'clock. I think it's probably a good time to say thank you very much indeed to you, George, and time for Savannah Resources. George, you've been a complete star. Thank you for joining us tonight. I'm sure everybody listening would join me in thanking you. That was very interesting. Thank you so much.
Well, thank you for having me, and thank you for the investors and the participants for signing in tonight.
And look out for Andrea. She says she's going to become an investor.
I certainly will.
Fantastic. Thank you so much.
Pleasure.
Okay, and it's time for Savannah Resources. Okay, Savannah Resources is an AIM-listed lithium business with development stage assets in Portugal and Mozambique. It has a market cap of £74 million. On the 12th of January, Savannah announced a potential agreement with Galp, the Portuguese energy group, regarding project-level investment and a substantial lithium offtake contract in the Mina de Barossa mine project, a key step towards commercialization. Savannah also have a stake in the Matumba JV in Mozambique, an undeveloped mineral sands project in partnership with Rio Tinto. I'm delighted to be joined tonight by David Archer, CEO at Savannah Resources. Over to you, David.
Good evening, and good evening to London South East, and thank you for the privilege of being able to present tonight and introduce Savannah to your audience. So thank you.
It's our pleasure.
I'll just share the screen. Okay. Savannah, AIM listed, and what I'd like to talk to you tonight about is our Mina de Barossa project in northern Portugal. It is unique in the European setting. It's Europe's largest conventional resource of lithium, and we're bringing the project into operation at exactly the right time, as there's an enormous surge of demand for the material to power electric vehicles, which are being introduced widely in Europe as we speak. This is the disclaimer. As I said, largest conventional lithium project in Europe, and I think the thing that we're really sort of focused in on is the fact that what we have in Portugal is, very much an analogue of the what's happened in Australia. Australia is the largest sort of global producer of lithium, and it's effectively altogether based on a very similar project to the one like our own. Production of spodumene, lithium, open cut mining, production of a concentrate, which is then utilised by conversion plants to produce a hydroxide material. This can be a very significant mine for Portugal. It's a small mine in mining industry terms, but it punches above its weight in terms of what it can actually do around the elimination of CO2 emissions. Lithium from our mine could power anything up to 500,000 to 600,000 electric vehicles per annum. I think the key thing, in terms of the takeaway for people looking at this tonight, is the fact that 2021 got off to a fabulous start. We launched with a landmark deal with Galp, which is one of, it's actually Portugal's second largest company. It's got a market capitalisation of over 7 billion euros. It is an oil and gas company making a transition into the energy transition. And we announced a partnership with them, and that will sort of help to sort of fund our operations from here. And it's complemented by an offtake. They will become a customer for our material for about half of our production. Mina de Barroso is an operating mine at the moment. We produce quartz and feldspar, but we believe it's the nucleus or the core for the development of other lithium opportunities in Portugal. The Portuguese government is 100% behind the development of this wonderful sort of mineral endowment that Portugal sort of features, and we believe that there's considerable sort of further exploration potential in Portugal. Our position as being perhaps the most sort of senior member of the lithium industry in Portugal, are well placed, we believe, with the tender, and of course the association with Galp really sort of underscores our capabilities. We think there are wider opportunities as well in the broader Iberian Peninsula, and of course, the partnership with Galp demonstrates the sort of appeal of a project like our own. Just focusing in on where we're at, the project's clearly in Portugal. We're in the northern part of Portugal, and it's a great place to have a mine. It's very well endowed in terms of existing infrastructure, dual carriageway, expressway, leading right down to the port of Porto. Porto is actually the second largest port in Portugal. It's the second largest city in Portugal. The northern part of Portugal is endowed with an enormous amount of renewable energy production, principally from hydro and wind, and that's really sort of a key element in the Mina de Barroso story. We'll be able to produce a low carbon footprint product, utilising the renewable resources in northern Portugal. Portugal's first world country. It's got a fantastic education system. It's got a lot of enthusiastic, highly trained young people, and the cost setting is certainly more favourable than it would be in Australia, for example. Just coming back for a moment to Galp, we announced this agreement a couple of weeks or so ago. Galp will be investing $6.4 million to earn or a 10% interest in the Mina de Barroso project. There's certainly potential for that to increase, but importantly, it came with a off-take contract. They'll be taking around about 100,000 tonnes of spodumene concentrate per annum from the mine. That's about half of our production. And really the appeal of the collaboration with Galp is that not only does it provide off-take, and this is the first spodumene off-take agreement signed for a European project. It's a really a major milestone, and I'm delighted that our executive was able to bring this deal to our shareholders, but it also comes with investment as well. So it's a very, very powerful alignment, and of course, very much strengthened by the fact that Galp has a very large balance sheet. It has strong cash flow, and importantly, it's very much aligned to deliver its ESG objectives, and in fact recently was awarded, I think they won the sort of third, they were third in the global index of global sustainability as awarded by Dow Jones. So a wonderful sort of validation of what we're doing, and gives, I think, investors a sense of a very long-term approach to this project, and a long-term approach by sort of Galp to sort of looking at opportunities in the Iberian Peninsula. Just quickly about EVs, and we've really seen over the last 12 months, despite the effects of the pandemic, a very sort of marked increase in EV sales. Of course, a lot of that's been promoted and on the back of government legislation. But I think what we're also seeing now is a sort of very major expansion in the product ranges EV product ranges now being offered by the OEMs, the global car producers. So there's a much better choice for consumer. At the end of the day, no matter how much government support, if consumers don't want to buy it, they won't. And but we're seeing evidence of that. And in fact, Europe, clearly, will be the second largest EV region globally, as effectively a trading bloc. Our project is right in the middle of that trading bloc, right in the middle of one of the biggest markets in the world. So we think we're very sort of privileged, and yet there are very few, in fact zero, developed resources of lithium. And the best one, and the most conventional one, and the most latent one is actually owned by Savannah. So, we sort of see the world sort of coalescing around these trading blocks, Australia and China effectively. Australia providing the raw materials, China doing the processing, and in our case, Mina de Brosso doing the raw material supply and being sort of consumed by the OEMs. So, we are terribly well placed, I think, as we sort of see surging growth. And I think, what we've also seen with this emerging growth is that a marked increase in the value of listed lithium equities. The equity capital markets, particularly in Australia and the United States, came early to this. They were alive to this very early on, and we've seen sort of remarkable price increases in uranium equities, particularly in those two markets. I think that was sort of probably highlighted by the fact that we've seen the lithium price sort of bottom in 2020. It started moving up in late 2020, and it's moved up from around about $350 a tonne for spodumene concentrate up to around about the mid 400s, if you can get it. I'm quick to say that don't try and get spodumene concentrate from Australia, because it's sold out. It's fully committed. And there's some really rising anxiety in the minds of the lithium value chain as to where will this vital strategic metal, lithium, where will it be coming from? Where can they get it? And that clearly sort of puts us in a very sort of wonderful position to at least help out, but not totally solve the sourcing requirements of Europe. And of course, spodumene lithium actually is the sort of the key mineral that goes into the production of lithium hydroxide. Lithium hydroxide is the key chemical that goes into the production of cathodes, which are the electrodes that go into batteries. The cell manufacturers have been building cell manufacturing plants in Europe furiously. The mining industry hasn't quite sort of stepped up and hasn't really been building lithium mines quite as furiously, but we'll certainly be busy building our own. I think that the context is also very important. We think being in Europe is very sort of key. Europe is absolutely intent on delivering on its carbon reduction targets as in order to combat climate change. There are very sort of significant legislative mandates around sort of achieving that. And Portugal also sees an opportunity coming from this. They have a wonderful lithium endowment. Portugal sort of sees the opportunity for the development of new industry, clearly mining, but also downstream industries such as the production of lithium hydroxide. And perhaps cell manufacturing as well. The government has a sort of clear and enunciated lithium development strategy, which was put in place, announced in 2017, and they're looking to release sort of further ground in the second half of this year, which we believe much of which is highly prospective and certainly will be tendering. We're also seeing sort of manifest support from the European Commission as well. The European Commission has been very alive to this sort of looming supply crisis to support the development of indigenous supply in Europe. And in fact, the United States has also sort of recently started looking very sort of seriously at the resources, the lithium resources that are effectively available to sort of countries that are sort of part of the Western Alliance. So a really strong thematic with a strong sort of following wind. Just about the resource, I've got a 27 million tonne resource of lithium. We think there's plenty of upside for further resource. Importantly, we've got a granted mining lease. It was granted in 2006. Has a 30-year mining life. We're mining there at the moment. We're drilling, we're blasting, we're producing quartz and feldspar for the local sort of ceramics industry. And what we're looking at doing is sort of expanding the scope of that mining lease to encompass more value-added processing and an expansion of mining rates. We're looking at an open-cut mine development, a very sort of conventional mining approach. And we're in the latter stages of completing the sort of securing the sort of permissions to allow that expansion by way of a change to our current operating license. Next page. This is just a little bit of an outline of the project itself. You can see this operating lithium quarry here. We've undertaken a very extensive exploration program, over 30,000 metres of drilling. It is the largest resource in Europe. It's all at or near surface. It's well graded and very easily mined in conventional mining terms. I'm conscious of running out of a little bit of time. It's also a very sort of conventional processing plant. We'll be looking to sort of piggyback off all of the know-how and knowledge that's been developed in Australia around the development of spodumene mines exactly like this. We're not into doing anything novel. What we're into is employing techniques that are well proven and de-risked. Also quickly, these results were announced a couple of years or so ago in terms of, and broadly sort of outlined some very sort of compelling economics for the development of the mine. Since then, we've looked to slightly expand the run-of-mine mining rate from 1.3 million tonnes per annum up to around about 1.5. But I think an important takeaway for everyone on this call is the fact that as the likelihood is that we'll be selling the majority of our production in Europe, that will sort of eliminate the sort of transport charges to Asian markets, and we believe that will help to sort of increase the NPV and further increase the economic attractiveness of the development of the project. This is just a little diagram to sort of illustrate that we believe we've got line of sight in terms of taking the resource from 27 to 50 million tonnes. And here is just really, I think, an illustration of the milestones we've achieved. We secured the project in mid-2017, and we've really undertaken a very sort of fast-paced program of exploration, evaluation, resource development, and economic analysis, and of course topped off in the last couple of weeks with the deal with Galp. We believe that there will be a number of refineries to process spodumene lithium in Europe, and I think that's been a sort of very major change over the last 6 months as well. There are good, solid developing customers in Europe. I think there was a question a little bit earlier about where I might see the share price of Savannah going. It's probably a bit difficult for me to answer that, but I think this slide at least gives an indication as to what the potential might be. We're sort of trading at around about 0.4 market capitalisation to NPV. We believe that as we sort of continue to sort of de-risk the project and we complete our DFS, which is underway at the moment, that will accord us a higher ranking. And interestingly enough, a company with an identically sized resource of spodumene lithium in the United States has been accorded a really very handsome sort of valuation, and so I hope that sort of puts it all in context. I'll just sort of quickly brief a couple of things. One of the big focuses for the company is our environmental and social side of things. We believe that there are sort of compelling environmental, economic, commercial, demographic reasons for the developing this project. We've got a very comprehensive benefit sharing plan that we're developing at the moment, and we hope to sort of launch in the next month or so. We're working closely with sort of communities and stakeholders, and we're looking forward to being a responsible, successful corporate player in Portugal, and working closely with communities and stakeholders. So that's about it. We think we've got the best lithium project in Europe. We think Europe is probably one of the sort of the premier jurisdictions in the world to have one. We're full of enthusiasm. We've got rising lithium prices, rising sales of electric vehicles. We think it's the right project at the right time, in the right place, in the right decade. Thanks.
Thank you very much indeed, David. Let's get straight to the Q&A. The questions are flooding in from the audience. Let's start with Galp, clearly fundamental to your future. What are the next steps? You've got a heads of agreement with them. When does that become more formal?
Well, they're undertaking due diligence at the moment, extensive sort of due diligence at the moment, and we sort of hope that will be concluded over the next couple of months. Then there will be sort of documentation. So, we're probably looking at a sort of three month sort of period to sort of conclude the arrangements with Galp.
Fantastic. So a very busy time for you, because you've got a feasibility study which you're working on currently. What's the likely timeline for that being completed?
Looks like sort of second half of the year. A lot of the elements in the feasibility will sort of really depend upon the outcomes of the EIA. We've put in a couple of development options, or 3 development options in the EIA. The regulator is reviewing those at the moment, and depending upon which option is sort of chosen, that'll sort of help more precisely define exactly the layout of the project. So anyway, second half of this year is the DFS timeline.
Okay, and Andrea Scott has asked a similar question to myself. She's interested about the environmental impact assessment, which I understand you started May 2020 for Barroso. At the time you said it was expected to take 10 months. These often slide. What's the latest date you expect to hear back? And because obviously the environment is just such a big issue in terms of mines.
Yeah, well, we're very proud of what we delivered with the EIA. We believe that we've either eliminated impacts or reduced the impacts to the point where they're no longer meaningful. So, this is, as a mining project, I think it's very hard to be sort of critical of it, I think. But we sort of recognise that it's important to present something that that's really sort of leading in its approach. And there are a number of features to our plans which I think will really distinguish what we're doing, and I think this will become a real sort of showcase as to how modern mining can operate in a first world jurisdiction. But apart from that, in terms of timing, we're dealing with a series of questions that have been put to us by the regulator. Once they're answered, we'd anticipate moving into a sort of period of public consultation, which takes about 45 days. So, we're probably still a few months away from confirmation of the IEA decision.
So you see it as a good sign that the regulator are engaging?
Well, I think it sort of illustrates the rigor of their approach and their professionalism, and we've been impressed by the depth of their analysis and the way they've sort of conducted their evaluation. So, there's certainly no shortcuts that we can sort of observe being taken, and it's a very sort of fulsome and serious analysis by the regulator.
And the local communities in Portugal, how have they taken the news?
I think there are sort of varying views. There's the majority of the people in the region, I think, are excited about the opportunity of having a new major economic development for the region. It's going to bring enormous benefits in terms of employment. It's going to really reinvigorate the local economy. It's going to sort of recharge local businesses, which have really suffered grievously as a result of the pandemic, and really add a little bit of resilience to the area. Of course, there are always some people who don't like what you're doing. Doesn't really matter whether you're renovating your house. Generally, there'll be someone in the area who doesn't particularly want to support what you're doing, and mining is no different to house renovation in here in London. Okay, that makes a lot of sense. Okay, let's move on from Barroso. A general question from Chameleon Man. He asks by email whether Savannah Resources would consider a dual listing in the US. He says it certainly hasn't done EMH, European Metals Holdings, any harm, he says. Might that be on the cards? Well, we're certainly, as I've sort of pointed out during the presentation, I mean, there's been an enormous increase in the value of lithium stocks, both in Australia and the United States. There is a valuation gap, and I suppose that's an opportunity for UK investors with Savannah. But it's really incumbent upon the board and myself as chief executive to see is there an opportunity there for us, and so that's one thing. And but I think it's got to be evidence based. But certainly it's very encouraging. European Metals has now sporting a very handsome market capitalisation. We've sort of seen sort of large slabs of equity raised by Piedmont in the United States. And of course, Australia has a very vibrant and probably the sort of the deepest market for lithium stocks globally. So it's a good point, and having a board meeting tomorrow, and certainly I'll take that message to the board tomorrow.
Okay, let's move to Mozambique. We're certainly cracking around the world tonight. Could you update us on what's happening with Rio Tinto? Where is the JV at the moment?
Sure. Well, we're earning a 35% interest from Rio by undertaking a preliminary feasibility study, which is underway at the moment. We were awarded our final sort of mining lease early in 2020, and we're doing or started up some of the baseline studies. We're doing commissioning an environmental group to kick off the environmental study, and we're undertaking a landowner analysis as well as at the moment, and sort of pulling all the elements together on the PFS. We work closely with Rio. They're a wonderful joint venture partner, and really bring a perspective that perhaps doesn't have. And of course, Rio is one of the biggest producers of sort of titanium sort of feedstocks sort of globally, and have the Richards Bay facility just south of the Mozambique border on the east coast of Africa. So the project's sort of building momentum, I think, is probably sort of the key phrase around that.
So sometimes when a smaller player gets into bed with someone as big as Rio Tinto, things can be a little bit out of kilter. How has that relationship gone? have they are the giant and you are the minnow, as it were. Has it worked? Is it working out okay?
Yeah, no, it is actually, and I think they sort of respect our professionalism, our application, and I think it's an illustration that, you know, Savannah does punch above its weight. You know, we mightn't have an enormous executive infrastructure, but those executives we do have are very able, capable, dedicated, and hardworking, and so I think Rio actually prefers us to be sort of in charge of this project.
Okay, David Rogerson asks a cheeky question. You sold 2 million shares in November. Do you have any regrets?
Well, I'd like to have a whole lot more. I have a series of options which are expiring in February, so I hope that they go over the share price goes over the exercise price. So we'll see. We'll see.
Okay, sorry, that was a bit of a low curve ball there. Andrea Scott asks a general question: how much lithium does the world hold? How much is there to be mined? How much has been discovered to this point?
Yeah, well,
to what extent is it a rare metal?
Well, it's not particularly abundant. You know, it's not as abundant as iron ore and things like that. But you know, the key to all mineral resources is finding them in economic concentrations. You know, that's the sort of real key. And of course, having something that's reasonably able to be developed. You know, one of the sort of the key impediments, I suppose, to mineral supply is that, you know, the lead times on new mine developments, you know, run from 7 to sort of 10 years plus. So, you know, you just can't snap your finger and sort of bring production online overnight. So, yeah, I think that's one of the keys of our project, that, you know, we've put the hard yards in. It has been a lithium winter in 2018 and 2019 and the early part of 2020. But this is the lithium spring, and I think the mid-2020s are just going to be a long, warm summer for lithium producers like Savannah, I think, or at least I hope so anyway.
I think a long, warm summer is a good point for us to end the Q&A on, David. Thank you very much for joining us. You've been a complete star. Thank you so much. And we got through a lot in a short time there, so well done.
Thanks, Don.
Okay, fantastic. Now we're joined from South Africa by Goldplat. Goldplat is a small but profitable African gold recovery services company listed on AIM and headquartered in South Africa. It has market-leading operations in both South Africa and Ghana. Goldplat's strategy is focused on utilizing its robust cash flow generated by its gold recovery operations to self-fund sustainable growth. It is hoping to expand the niche gold recovery business model and potentially move into platinum recovery as well. GDP is currently selling its Kenyan gold mine Kilimanjaro to Mayflower. I'm delighted to be joined from Johannesburg by Werner Klingenberg, the CEO at Goldplat. Welcome, Werner.
Okay, thank you, Donald, and thank you for everybody that's joining us tonight. I really appreciate your time. I see I've got the privilege of closing out the session today. I think the purpose for tonight for me is really just to give everybody an overview of Goldplat and Goldplat PLC, give them a bit of history on the company. And I think more importantly, to highlight what has been the strategic changes of the last year. Now, for those that don't know, Goldplat PLC group currently comprises 2 niche gold recovery businesses, as well as 1 held for sale mining asset in Kenya. We've got a few other exploration assets in Ghana. But before we go into too much detail, I think it's just important to highlight some history. Goldplat PLC in the current form has been around for more than 20 years. We've been listed on the London Stock Exchange in 2006. And the strategy when we listed was basically to expand the current recovery operations in South Africa and to Ghana. And the main aim was really to build a junior gold mining group in Africa from the working capital from the recovery businesses. Now, for various reasons, which I'm not going to go into too much detail tonight, the mining and exploration segment never really managed to realize any profits, although a significant amount of capital was put into the segment, more than $10 million. And a lot of that actually came from profits in the recovery businesses. Now, in 2019, we've decided to put our mining asset in Kenya under care and maintenance and start looking for a buyer or external investor. And since then, we've actually signed the binding term sheet for the sale of Kilimapesa, where we will sell 100% of our share in Kilimapesa. And I think with the imminent sale of Kilimapesa, we can now refocus our attention to the recovery business, which really has been the backbone of the group since we've listed. Now, the remainder of the presentation I'm going to take you through now is mainly focused on this recovery business. We'll deal a bit with the binding term sheet in the middle of the presentation, but that is basically where the focus is going to be. Let's see. So I think to start off, I just would like to give you some sort of an overview of where we currently are. The group is cash generative from continued operations. I'm referring to the recovery operations in South Africa and Ghana. We, at 30 June 2020, sat on a cash balance of £3 million. The two operations combined achieved the operating profit of £5 million. And that is against the current market cap. I'll give you the detail later, of around 12.4 million as per the share price today. And I think we've got a clear development strategy of how we want to increase production in this recovery businesses. We will be focusing on building our strategic and key relationships in West Africa and Ghana, West Africa and South Africa. And we will also look at obviously exploiting our remaining resources in the group. We've got a JORC compliant resource of around 82,000 ounces of our tailings facility in South Africa, which is on 1.4 million tons at a grade of 1.7 grams a ton. Then furthermore, we've got a significant geographic reach. We source material in South Africa, West Africa, and as far as South America. And I must say we're making every year more and more progress in South America, signing up new mining companies and groups. We also have some commodity diversity, although really PGM still remains an area we would like to diversify further, and I'll deal with that a bit later. We keep on saying we're a niche recovery business, and I'll indicate when we look at our processes why we say so. But more importantly, we really have an experienced management team that's been with us for a long period of time. As I said, I mean, we've been in operations for 20 years. We built up a team that really understands the recovery business, which is quite unique because we work with complicated material, which is discarded from the mining plants and operations. And that's really where we see our value at ease at the end of the day. I think importantly, to stay in front of the curve, we focus on continuing upgrading our infrastructure to improve our efficiencies and recoveries. We spend a lot of money also just on repair and maintenance to make sure our plant availability is always up to standard. And I think when we also talk about investing into upgrading the infrastructure, it is important that our focus really at this moment is to make certain changes to give us the ability to actually go and process even more contaminated material that's lower grade, and in so increase the amount of material out there that's available for us to process over the long term. If we quickly look at some data, I indicated our share price is currently 7.38p, giving us a market capitalization of just over £12 million. And you'll see over the year we had quite an upswing in the share price. And that's really on the back of two things. I think with us announcing that we're moving away from mining and exploration, with the increase in the gold price, and also the 30 June 2020 performance resulted in this uptake. I see we came down over the last few weeks, and I think that's mainly related to the gold price movements. That's been quite erratic, but it's still at very good levels for us. For those that's not familiar with the group, we've got quite an experienced board that's been with the company, most of them for more than 5 years, and we've got quite a good set of experience of the London markets and mining inside our non-executive board, led by Matthew Robertson as our non-executive chairman. If we then move forward, we can quickly, as I mentioned, we've got the South African and Ghana operations, and in 2020 we achieved operating profits in South Africa of £5.6 million. And when I give these numbers, obviously in comparison with our current market cap, I think there is definitely still a lot of value in our share price. In Gold Recovery Ghana, we achieved profits of before tax and finance cost of £724,000. I think this for me is the most important slide that I would like to share with you today. If we look at Goldplat recovery, the question is really what we do. And Donald, when I actually listened at the previous presenters, I thought to myself, although we are a producer of metals, we produce gold and PGMs, I think where we differ is we don't necessarily have a resource as the other presenters indicated, and our resource really remains our strategic relationships and our contracts with the blue chip gold producers in industry. And with that, we don't have necessarily a specific ounce figure around resource. However, we also don't have the mining risk associated to extracting the ore from the ground. Now, if we indicate what our clients is, already said blue chip gold producers, and that relates to Southern Africa as well as West Africa, although we've sourced material out of North Africa as well. And then obviously as far as South America, we brought material in out of Brazil, Uruguay, and are looking to source material out of Peru as well. Actually with the current shipping fees, it's not at all expensive to move these byproducts from South America to Ghana to process. And that has actually helped us quite a lot in terms of maintaining our current operating margins in Ghana over the last period. If we look at what the materials is we process, if I talk about byproducts, now if you're familiar with the gold industry, activated carbon is utilized to extract gold out of ore. Now, in any mining operation, you have spent carbon where the actual activated carbon started to abrade and is screened out, but that still contains value and gold on it. We also generate value from mill liners, which comes out of the mills, and that is impregnated with gold during use. A big part of our revenue and margins is also coming from wood chips in South Africa, where with all the underground mining operations in South Africa, there's a lot of wood support being used, and this is normally blasted and comes up with the ore and screened out in the plant for various reasons. And we then take these wood chips and then process and dispose of them in an environmental friendly manner through our circuits. We also then have we really process any byproducts that is gold bearing that comes out of the mining operations. But if we look at what is the most important for the group, it comes down to fine carbon wood chips. And then especially in South Africa, we do a lot of cleanups of old mine sites where you find flay areas or other areas that's been contaminated and that is gold bearing, that we process through our own CIL circuits. Now, if we look at our processes, I think what really makes us a niche operation at the end of the day is that we've got various types of plants, and we've got we've got 4 CIL circuits just in South Africa. We've got incineration capacity, we've got a wash plant, spiral circuit, shot blasting circuits, and I've already mentioned incineration. We've got the rotary kilns, we've got FBIs, and flotation and elution circuits in South Africa. So the nice thing about this is that we can batch process the various material, so we don't need to mix it. And normally what you'll find is material we receive, we don't just process through one specific circuit. Each material is evaluated separately and follows a different route. Some material might go through 2 different circuits to extract the value, whereby certain material might go through 5 processes to make sure we extract the maximum value of gold out of that material. And after it's gone through these processes, the revenue is really generated from gold that is smelted in gold doré bars or silver doré bars. We also generate PGM concentrates as well as ash and other gold concentrates that we can provide to the smelters for final recovery of gold. I think we also like to look at ourselves as a green gold producer. In the end, we do provide value offering to deal with the mine's byproducts and waste, that if we haven't taken it away, it would have ended up on stockpile or on tailings facilities that would have required rehabilitation in the future. And we give the mines the opportunity to actually minimize that footprint during their current operations. We've been selected as a green economic mark issuer on AIM. And then if we also look at our sourcing methods, because we deal with sourcing of gold, not just from blue chip mining operations, but also from any area organization that requires us to clean up old mine sites. We make sure we go through proper responsible gold accreditation of those clients before we enter into any contract with them. And we also audit it in terms of those guidelines on a regular basis. We've also signed up, and we are partner of the Minamata Convention, trying to limit and obviously the use, well, we don't use any mercury, but also trying to see where we can assist. We've been in discussions with the Ghana government to see if there's ways we can assist them to limit the mercury currently going into areas because of illegal mining, but that is still a process that needs to be completed. Okay, so if we look at where we are currently and where we want to go, I think for us, the key will always be to obviously strengthen and increase our relationship in industry. And then that's where our resource is. If we look in South Africa on the low-grade material, I'm happy to say that we've got more than 2 years worth of supply of material for our low-grade circuits. Wood chips, which is quite a key supply, we've got over close to 18 months of material, either on contract or on site for processing. And then on the byproduct side, that is obviously from current arisings from mines as and when they produce it. And there we've got most of the mining operations in South Africa that signed up with us, and we get regular feed from on a monthly basis. For me, what my aim is going forward is to try and secure at least 5 years for these various circuits, to be able to come to market and say, well, we will be able to repeat what we've done in the last year for the next 5 years based on sources that's available to us. That's a position we've never been in before in our history. And I think that's really key for us to maximize value out of the share price for our investors in the future. In terms of diversifying for growth, one of our key strategies remains increasing our footprint in terms of the processing of PGMs. We're currently busy with some campaigns for PGM producers where they've got high-grade concentrates they produce and looking for a different avenue to create value from that. And further, obviously one of our biggest value adds in the future would be the monetizing of the tailings storage facility in South Africa. We have spoken about the JORC compliant resource. That JORC resource was done in 2016. So obviously the first question from any investor would be, well, if you're sitting with that on your doorstep above ground, why have no value been extracted from it before? I think firstly, it's actually our current tailings facility. So we need to secure a different tailings facility before we can start mining and monetizing that TSF. We're currently in process because this TSF has reached capacity, and we'll need to move off the site quite soon. So we are looking to establish a new tailings facility adjacent to the current facility within the next 6 months, and that will then start giving us the ability to monetize this TSF. That being said, what we will require is to have a larger tailings facility than the one we currently got licensed. We want to get licensed for. So firstly, we need to secure a final deposition site where we can deposit this tailings facility. And secondly, we will need to construct the optimal plant to process this tailings facility at the right capacity. As indicated, it is our tailings facility. So the material in there has already been processed, and we're going to need to have different and unique processes and probably higher capacity requirement to process that optimally. We're still currently evaluating what those processes will exactly entail going forward. And so that being said, for us, considering these various options, we still believe the best value will really be to look at a third party to partner with to process the tailings facility. Somebody that already has a plant or capacity and that can be adjusted to fit the processing route we will decide on, and also that's already got a sufficient tailings facility for this material to be deposited on. So that's really where the aim is now. And once we've established the optimal route to process, we'll come to market and we'll be able to give them a lot more information in terms of, well, what is the exact value we can generate from this tailings facility. If we then look at Ghana going forward, it's important to understand how Ghana differs from South Africa. In South Africa, I indicated we have CIL circuits that process lower grade material from the old mining sites that's been generated over the last 100 years of gold mining in South Africa. In Ghana, we do not have a CIL circuit, and also there's not really that amount of old mine sites that is available to process. There is, however, a lot of artisanal tailings available to process, and we'll talk about that shortly. But in Ghana, we only focus on fine carbons, mill liners, and other byproducts, excluding wood chips and low-grade surface sources. And that is all sourced from current arisings from mines. So in Ghana, it's even more key to build relationships, not just with the mining groups, but also with the governments. If we want to be able to secure and export material out of all the ECOWAS and West African countries, we've made good progress on that over the last 12 months. We've signed contracts and was able to export material out of Mali. We've got another trial that we're currently doing in Mali, and we then hope to expand from there into Ivory Coast and Burkina Faso. And again, there we need to work with the mining groups and with government to find the right process of exporting material, and that's currently where we're investing a lot of our time in. I think in Ghana, we can't talk just about West Africa. We've been able to secure new clients in Brazil over the last 3 months, which is encouraging. And with that, South America is also becoming more and more important in terms of the growth in Ghana. I've already indicated the artisanal tailings that is available in Ghana to process. Now, for those that is familiar with Goldplat and that's been following the story for some time, will be aware that in 2012, 2013, Ghana actually created significant profits from the processing and toll treatment of artisanal tailings, which has subsequently been stopped because we didn't have proper tailings facility for processing of this type of material. And secondly, we will also stop to toll treat the material through one of the mines in the area. We're looking to see if we can restart this in one way or another, and we're currently in discussion with the Minerals Commission, and to see if there's certain ways we can actually restart. We don't expect to make similar profits than what we did in 2012, 2013, but we believe we can still achieve enough value to really support.
Werner, I'm very sorry to interrupt you there. We're absolutely running out of time. 1 more minute.
1 more minute. Okay, thank you very much. So yes, we want to create value from the recovery businesses. I think quickly just want to go forward, and maybe we can handle the Kenya sale as part of the questions answer sessions, because I just want to deal with what basically the recovery business is for us going forward. I've got a quick slide here that's been extracted from our numbers for the last five years, indicating just the revenue and the operating profit before finance cost we managed to generate from Ghana and South Africa combined. And you'll see that we've on average been able to achieve around about 4 million pounds profit from these operations, if we exclude listing costs and obviously the losses that was incurred on the mining and exploration segment. So we're quite confident that if we follow the strategies that we've discussed, that we will be able to replicate this in the future, and that will, we believe, put us in a position to generate cash and to declare dividends. We want to become dividend declaring in the future again, as we don't need to invest into mining and exploration. we will be able to share some of the value out of the recovery business, and that will definitely be the intention. And that's basically it, Donald.
Okay, lovely. Gosh, there was a lot in there, Werner. That was a lot of detail in there. Can I just take you back quickly to Kilimanjaro? I'm sorry we didn't manage to get to the Kilimanjaro slide. So
Yeah.
could you explain what Kilimanjaro is for the uninitiated, and
Yeah, I mean,
why you're selling that gold mine in Kenya?
Yes, I mean, Kilimanjaro is the only exploration property that was developed into an operating mine. And it remains quite an exciting prospect. I think the reality is that over the years we did not invest enough into capital. I mean, if you want to really be aggressive and mine, you need to invest the capital in the beginning, and then to extract value later on. In 2016-17, we increased the capacity of the plant, but unfortunately, we didn't put the same amount of capital into the mine. And that just didn't allow us to really extract the value we should. And that's why we decided, well, it's better to get external investor or buyer to put in that capital and to really extract the value. Now, the current deal on the table is that for the sale of 100% of Kilimanjaro, we will take 1.5 million worth of value shares in a listed entity that will end up holding that investment in Kilimanjaro. So that gives us the ability to, in the future, really get the upside from Kilimanjaro we believed we could have achieved if we put in the necessary capital. Per the agreement, Mayflower will need to invest $4 million into that business. And furthermore, we will also get 1% net royalty fee, capped at $1.5 million as well.
Okay, Chris Reed would like to know, when do you expect the sale of Kilimanjaro to be completed? Which is a fair question.
Yes, I think initially we were quite optimistic when we indicated we wanted to get it done by the 31st of September. I think there's been various reasons outside of our or Mayflower's control for us to complete it as yet. I think since New Year we've made a lot of progress, and we're quite confident we'll still be able to get something done by 28 Feb.
Do you agree with the investors on the bulletin boards, which say the sale has effectively been overhanging the share price for quite some time, and that the share price will take off once you get the sale closed?
Yes, Donald. I mean, the reality is we're still the owner of Kilimanjaro, and we still, I mean, the benefit of the deal is that currently Mayflower just still advance on loan basis working capital to support just the tailings processing we're currently still conducting in Kilimanjaro. But until we haven't completed the sale, I think we will still have that overhang. I mean, we've been making $1 million or £1 million losses for the last probably 4 years at Kilimanjaro. And the investors is looking forward for us to move away from that and really just focus on the recovery business.
Okay, James Alexander wants to know who you said in terms of the tailings facility, you want to work with a third party. Sounds fair enough. But who are the major players you might consider? And are you in talks with these folks?
We obviously looking at various options at this moment. We've got not a lot of people that's in our vicinity that we can talk to. So that's one of the options. The other option is obviously to look at processing it ourselves. We'll just need to secure a tailings facility close to our premises. And I think constructing the plant will not be a problem. I mean, the size of the resource is of such a nature that if we need to construct a separate plant, I think it will be more than justified.
Okay, James Alexander, this is probably a good point to end on. What are the growth prospects for Goldplat? What percentage of the addressable market do you have, and what percentage share could you potentially get? Like an investment summary question, really.
Yes. I think, I mean, there's a lot of ways you can answer that question. I mean, in West Africa, there's still a lot of potential to grow the recovery business. And as I said, I mean, we haven't unlocked Burkina Faso, we haven't unlocked Ivory Coast, we've got potential in Senegal. Obviously, South America, we only started now. But if the way I look at the recovery business and value for the investor, really, I believe if we can achieve the sale of Kilimapesa, if we can build a resource and then continue to generate profits at the current level, I believe the investors will really see growth in terms of the share price. Then obviously we've spoken about increasing our capacity to process PGMs, which has got a lot of possibility if you consider South Africa is the biggest PGM producer in the world. And largely, obviously, if we start processing the tailings facility, there's a lot of value and growth we're going to get from that, probably for 5 or more years, depending on how quickly we decide to process it at the end. So yes, there's a lot of opportunities there. And I think, I mean, further to that, we'll also need to look at, as I indicated, to increase the plant's ability to process lower grade material. And by doing that, we can increase the resource we can handle, and we can give longevity to the business as well.
Werner Klingenberg, CEO at Goldplat, thank you very much indeed for joining us from Johannesburg. That's been fascinating. Thank you so much.
Okay, thank you, Donald. Much appreciated.
Okay, and that's it from us. Thank you for watching, and now back to Dave Mutton.
Thank you very much, Donald. What a great job you've done there, and a great evening overall. I hope you've all enjoyed it. I'd like to thank all the CEOs who have presented, also their teams who prepared them so well for the evening, and of course the audience for joining us. We will be doing more webinar investor events throughout the year, so do watch out for those. Also, don't forget, we do regular video interviews of CEOs that we share on our website and all of our social channels. So don't forget to subscribe to our YouTube channel, follow us on Twitter, LinkedIn, and Facebook. Tomorrow, we'll be sending out the slide packs for companies, as well as a video link of the entire event. So please do feel free to share that amongst your investor friends. And finally, it's been very educational, so why don't you go over to our website and share your thoughts in the company chat room, so you can share with people who couldn't attend the event. Thanks you very much for being a great audience and staying with us right to the very end. We've overrun a little bit tonight, but I think it's been a great event overall. So good night, stay safe, and we'll see you again later in the year.